know that there's not long to go before the 25th of December, but there's still going to be an awful lot going on in the financial markets during the coming week. Top down, the biggest features of the week will be the latest monetary policy decisions from both the Bank of Japan and the Bank of England, both due on Thursday, the 20th of December. Now, neither central bank is expected to make any changes. That means for the Bank of Japan that headline interest rates, if the forecast is correct, will be left unchanged at minus 0.1%. Yes, minus 0.1%. And that its quantitative easing or QE programme will be left unchanged at 80 trillion yen a year. Now that's the equivalent of £558 billion a year at current exchange rates, more than the Bank of England's QE stimulus over the whole of the last decade. However, do watch out for any changes in tone from Bank of Japan Governor Haruhiko Kuroda. There have been hints he might look to start backing off a little on QE, although with Japan nowhere near its 2% inflation target, that to me seems unlikely. The Bank of England is also expected to leave interest rates unchanged at 0.75% and not add to its £435 billion QE scheme, although Brexit remains a potential variable here. Watch how the vote plays out. It was 9-0 to do nothing in November. Since any shifts here, well, they could hint at the direction of policy in 2019 and beyond. Talking of Brexit, it will also be interesting to see what European companies are making of it all. On Tuesday the 18th of December, we'll get the latest IFO German Business Sentiment Indicator, and on Wednesday the 19th, we'll get the Belgian equivalent, the Courbe Synthétique. Now here's the IFO. Note that it has now fallen for 3 straight months, and the IFO survey actually peaked in January. Maybe worries over Trump, trade and tariffs are taking their toll on German industrial confidence, Brexit or no Brexit. And then here's the Courbe. Note that how the Belgian indicator seems to be a pretty uncanny read-through for the headline European Stocks Europe 600 index. Now, quite why the views of 6,000 Belgian industrialists should be so prescient, I frankly know not. But the Courbe is worth watching, particularly if you own any European stocks or UK-listed firms with big exposure to Western Europe. Again, note that the Courbe actually peaked sometime earlier this year. Now, bottom up, it is going to be a bit quieter in fairness. There are just 2 major scheduled announcements. One is a trading statement from FTSE 250 oil services and equipment firm Petrofac on Tuesday the 18th of December. The other, due on the same day, Tuesday the 18th, is more than capable of causing a fuss because it will come from FTSE 100 member and cruise ship operator Carnival, although do note this date is still a bit provisional and it could change. The firm is due to publish its full year results to the end of November. As we can see here, Carnival shares have struggled a little bit this year, particularly in the second half, although that has been true of most stock markets more generally, and also Carnival's US listed peers, Royal Caribbean and Norwegian Cruise Lines. 3 factors may have been at work here to dampen their performance. First, a third consecutive year of above average hurricane and storm activity in the Atlantic, with hurricanes Florence and Michael creating the most disruption in the autumn. Second, a higher oil price, although that did begin to weaken right at the end of Carnival's financial year end, which again runs to November, but nevertheless higher fuel costs aren't always a good thing. And then thirdly, a stronger US dollar. Now that combination of oil and currencies prompted Carnival to actually cut its full year earnings guidance back in June. Analysts are now looking for earnings per share, or EPS, of between $4.15 and $4.25 a share. So that'll be the first headline number to check out. Last year's outcome, by the way, was $3.61. Watch out also for any guidance for 2019. Analysts are expecting a 6% increase in sales to around $20 billion and a 10% advance in earnings per share to $4.66. In this final graphic, we can see the earnings per share progression in dollars over the past decade. Key variables to note in any guidance given by Carnival's management team, well, they will include net revenue yields, where Carnival has forecast 3.5% growth for 2018, booking levels, pricing and occupancy rates, particularly, as well as fuel costs and currency movements. So let's see what Carnival has to say on all of those. Thank you for watching, and I look forward to seeing you next time.